Welcome to Chronic Harmonics, and today I am going to be doing a walkthrough for a possible butterfly harmonic. So the first thing that we do is look for our impulses. As you can see, you have one from here to here. So what we do is we get our tool, which is the XABCD pattern, and we mark it from here to here. Of course, I've already done that. The next thing that we're going to do is look for our point B, our reversal. So what I do is use a fib retracement from point X to point A. As you can see, have it set up. What I would like to do is find other confluences within certain areas. As you can see, we have the weekly open, the daily naked point of control, a one-day order block, and a New York session located within this area. So we have 1, 2, 3, 4, 5 confluences within this area, which gives me greater confidence that a reversal will happen. Another thing that I do like to do that I've forgotten to talk about is look at ranges. The reason being is because using that information, you know where people are going to start entering trades. So if we take a fixed range volume profile of this range right here, so as you can see, the value area low and the point of control is located within this area. So I'm going to be very interested in this area. Now that we've got our point B, we've got to know where our point C is going to be. And this is where we're going to exit the trade. So of course, first things first, we take a fib retracement from point A to point B. We're looking to target the 618 and the 66. Second thing again, trend-based fib from point X to A to our hypothetical B. Again, the 0.5 lines up within this area. If you look closely at the charts, you can see that there's a little range around here. If we take a fixed range volume profile again, the POC is located within this area. So this is how my hypothetical long will look from here up to there, or just underneath. Now we have our point C. We have to look for our reversal to our point D. So if we open up the fib retracement from X to A, you can edit it and include 1.272 and the 1.618. The second thing that we do is use a fib retracement from our hypothetical point B and point C and mark our 1.618 and our 2.618. As you can see around this area, there starts to be a bit of a confluence. What we can do is, if we look early in the chart, there is a range, and if I go to it right now, as you can see, there's a little bit of a range right here. Take our range tool, you mark it out, and we also have an initial balance right here, which will act as our support. Let's go back. There we go. So this will be our short position. Of course, I like to be a bit conservative with my trades, but at the end of the day, we're still making money. Remember not to be too greedy. So people, they could exit around here, here, here. Me, I like to be a bit conservative. Around here would be fine for me. You're still making what, 126% if you use $100, 3% risk. So after this, we're going to expect a reversal from our point D. So what we do is we take a fib retracement from our point C to our point D, like so. And then this will be our target. Our ultimate target would be here. Our initial target will be the X, B, and then the CC. So you will take profits as it goes up.